Welcome back, ladies and gentlemen, to another episode of In the Know Crypto. I'm your host, Clarence Thomas, and today we're going to talk about inflation numbers. The CPI came out today, the Consumer Price Index numbers that are 7.9%. We continue to have the worst inflation literally in 40 years. We're also going to cover briefly Biden's executive order. I know probably a lot of you have gotten some of the details on that with regards to crypto. But I want to talk about how this could play out, how things could play out in the crypto market as a result of the executive order, and what that time horizon could look like as well. And so now before we do that, let's quickly take a look at the markets. Everything really down today. I mean, Terra Luna's had a great week, of course, but it's been it's sideways currently. Bitcoin, of course, had a nice little rally, jumped about over 7% yesterday, ran up to just over $42,000 following the executive order being, it jumped following the executive order details being leaked on Twitter. And ran up, and then of course we got the executive order, which was overall very, very friendly on crypto. I'll say that very, very much compared to what it could be. Now, obviously, there's two sides of coin. There's people that don't want governments at all being involved. I don't see that as a reality whatsoever. I think. For us to get the widespread adoption that we want to see in crypto, you have to have that. And even if you don't want to see it, it's here. But anyway, so yeah, we had that nice little rally, as you see here. I keep two tabs open because when I'm recording, it takes so long to change that I just kept two tabs open. But anyway, had that nice little run up to 42,000. And then back down, it's been right at the 39,000 range, just under 38, closer to 39,000. And so, I don't know, we'll just see where we go from here. It's very, very hard. None of us have a crystal ball. It's very, very hard to know where crypto will go in the short term. Down there, basically impossible. Fear and Greed Index, looking a little better. It was as low as 23. A couple days ago, and it's at 28, so it's migrated from extreme fear to just fear, which is a little better. But yeah, still a lot of retail investors in particular that have fear to enter the markets, particularly again with regards to the altcoins, which could still very well continue to bleed out quite a bit. So. Just my opinion. Of course, none of this financial advice. You know the deal, the wrap. But those could continue to bleed out, and there's still a lot of downward momentum right now with the overall market. Whereas Bitcoin and Ethereum have really held overall sideways. Of course, that's a very, very, very loose term in crypto. Anyway, so let's jump over inflation, up 7.9% in February compared to last year as price rises grip U.S. economy. Now, what I want to talk about here, and this is this obviously from NBC News, and I think this is one of the reasons why a lot of people people for a very long time have lost confidence in mainstream media. But that's where you start to see, people like Joe Rogan, who has more viewers than Fox News, NBC, CNBC, CBS combined. But even like moderate sized YouTubers. Now I'm a starting YouTuber, so I don't even count. But you have moderate sized YouTubers that maybe have 100,000 followers. They get more views and more attention than a lot of these mainstream outlets because here they refer, obviously, they cover the Russian invasion of Ukraine. That obviously sends the price of oil, energy overall, skyrocketing, right? It also goes on to talk about supply chain issues. Hey, not a surprise there. There's obviously supply chain issues. Actually, I went yesterday to buy some kitchen appliances for my new apartment here in Puerto Rico, and I bought the oven, and they said, well, this is an inventory here on the island, not at the Home Depot store I went to, and they said, but there's one left, and we're not actually sure that you're buying it. You can go ahead and buy it, that way you're reserving it, but somebody else could be buying it as we speak, so we may need to call you and you come get your money back. It may not actually be yours, but if you buy it, at least if it's still here, it's yours. So supply chain issues are causing a main issue. So of course, if you have supply and demand, that's obviously going to drive up prices as well, right? But so that's not what my argument is here, right? When I bash mainstream media, it's at no point anywhere in this article and I read it twice, do I see any mention of quantitative easing, right? Of money printing. There's no mention of that, right? And so I don't think it's a coincidence that 1971, when we got off the gold standard, and I know I talk about this a lot, but it's true. We got off 1971 in August, off the gold standard, and started printing dollars. Within a short window of time, that actually the monetary supply of dollars increased 160%. That was in 71. Actually, by 80, I think maybe even before, we were at double-digit inflation, damn near twice as high as we are right now. Official numbers, we're much higher than 7.9%. Actually, real numbers. But I don't think that's a coincidence that we had heavy money printing in the 70s and then we had high inflation. We've had heavy money printing really since 2008, and then that was turned on. That was jet fuel poured on that project in March of 2020, and now we're looking at inflation numbers that I believe will go on to match what we had in the early 80s, right? So I think that plays a very, very important aspect, which I do not see in this article. Now, it obviously does go on to talk about the individuals that get hurt the most, just like anything, are the lower middle class and the lower class, right? The poor and middle class, which even sadly, many of the middle classes, they're being eroded anyway. Even if they were considered to be middle class, even a few years ago, a decade ago, they're gradually sinking down. So I'm going to say, unfortunately, we're going to see the American consumer that lives paycheck to paycheck, which is at least 76% of Americans. That's just Americans, breaking much faster than the middle and upper class. But again, the middle class is suffering a lot. That's a topic for another video. But the middle class, I think, gets crushed more than even the lower class because they pay the highest taxes. And carry the heaviest burden. So rich people find a way to not pay taxes. Poor people don't have to pay taxes, but they're suffering enough to begin with. Middle class absorbs a lot. Anyway, a little bit of a rant there. But so let's move on to Biden's executive order. And so there's a lot of positivity coming out from this. In the last video I made a couple of days ago, I talked about that in detail from my perspective, that I do believe that a lot of family offices, a lot of institutional firms, institutional money is still waiting for clarity. And you don't just hear what I have to say. What the hell do I know? But this video specifically, and I won't play it because I don't think the audio will sound that good, but I'm going to link it down below. But Matt Hogan from Bitwise basically goes on to say that, yes, we did a survey in November of last year, tens of thousands of institutional investors, because obviously Bitwise is specifically geared to crypto, but their biggest piece. And they said we surveyed tens of thousands of firms, institutional firms in November, who said that, hey, we're scared to touch crypto primarily for lack of regulatory clarity, right? It wasn't the volatility. I think a lot of them get that. It was a mix of ESG concerns, which we'll discuss that as well in later in this video, right? But they said that the number one thing was the lack of regulatory clarity, right? So hey, we invest, grandma and grandpa's money and buy them a little bit of a Bitcoin, which is, the like the modern day gold for them, right? We buy them some Bitcoin, whether it be an inflation hedge or they look at it as the equivalent to a tech stock, an emerging technology, rapidly emerging technology, right? So we put their money in, and then suddenly the White House, the government comes out and decides they wanted to fully attack it and ban it, right? So just without having that, they're very scared about making an allocation, and then how much of an allocation into the overall portfolio, right? So he goes on to say in this video, and again I'll link it below, he believes that now that with the executive order, I mean, it was basically marching orders for the agencies, right? The FBI, the SEC, all of these three-letter acronyms, right? To do a study into it for illicit activities, for central bank digital currency, for a proposed digital dollar, right? Environmental concerns, as I said, etc. But it also said one of the 6 areas was how to be, basically how the U.S. could position ourselves to be a global leader in this asset class, right? Because I think the U.S. regulators come to realize, like, hey, China's already got their own central bank digital currency. A lot of countries are adopting, you have Brazil, who have an ETF, spot ETF. You have Canada with a spot ETF. A lot of countries are embracing crypto and digital currencies, right? So anyway, we want to be a leader in that. And so that's very, very friendly towards crypto to say, hey, we're not trying to ban it or anything like that. We don't want to throw the baby out with the bathwater. We want to be able to harness this technology and be able to track it, right? So anyway, Matt Hogan seems to believe very, very strongly that this will spark an immediate rally throughout the rest of 2022. Now, I don't know what will happen. I still think, and this is a gentleman that comes from traditional finance, of course, with a lot of experience, but obviously, we still have firms that treat crypto as risk-on assets. They put it in the same category as tech stocks. You have the overall really just bear market that we've been going into in traditional stocks. And so I don't know where we're going to go, but I do agree with him 100% in the fact that this is very, very positive moving forward long term. And we still got at least $1 trillion on the sideline in institutional money wanting to come in. And if they all start coming in at about the same time, it doesn't take much to get an explosion and a parabolic run in probably Bitcoin and Ethereum, which I believe will probably spark a massive rally, of course, in the alts. I'm sitting pure Bitcoin right now, but that's just my play. So anyway, wrapping up what I want to talk about, because we touched on the 6 areas of the executive order. Now, going back to this piece about the institutional investor, the other part that the institutional investors are gun shy about, nervous about, right, are the ESG concerns, right? The environmental concerns, specifically with regards to mining Bitcoin, so proof of work algorithms. And so now 90% of Bitcoin has already been mined. There will only ever be 21 million Bitcoin, right? Making it the most scarce asset, high demand asset on planet Earth. Literally, we're days away. I think I saw something that was like 14 days away. Don't quote me, but we're days away from mining the 19 millionth Bitcoin. which means there's 2 million left that will be mined through the year 2140, another 118 years, right? So that's a long time to mine 2 million Bitcoin, which again starts to show the supply shock continues to be restricted and restricted with high demand, which is why I'm so bullish on this asset class. Anyway, you still have a lot of institutional investors say, hey, I want to invest in this asset class, but with the 19 million Bitcoin, when I buy Bitcoin, there's no way to say, hey, this was mined, renewable energy, ethically, and et cetera, right? There's no way to prove that. And so I was recently listening to an interview, well, several interviews with Kevin O'Leary, Mr. Wonderful, of course, from Shark Tank, who stated that what a lot of institutional investors are looking at doing is there are now publicly traded mining companies, right? So you have a U.S. and Canadian mining companies, right? But they have now become publicly traded, right? You can buy their stock. So a lot of discussion has been is that rather than some firms going out directly and buying Bitcoin, the way they want it to gain exposure is to invest in a mining company that is proven not only ESG compliant, but like 100% renewable energy, right? Now, he also does go on to mention that any company that gets carbon credits is a red flag because they can get carbon credits, but you can't really audit that, right? You can't really say like, well, hey, how much exactly of this, or once they burn that energy, it's hard to, there's no scale that really shows how much they used and didn't use, right? So as long as they go buy some carbon credits, they can, in essence, burn as much dirty energy as they want to use, right? And I'm saying that very loosely, but so a company that goes fully green, in fact, I'll make a video on this, but a company that is 100% renewable energy that says, hey, we're not going to sell or we're going to hold the Bitcoin on our balance sheet. They may sell a tiny bit, I'm sure, but say, hey, we're not going to sell, we're going to maintain the Bitcoin on our balance sheet forever. And so in essence, by buying into that stock of that publicly traded company, the value of that company will continue to rise as the price of Bitcoin continues to rise. Much in the same way as MicroStrategy, right? Michael Saylor, who their stock has gone absolutely berserk following them putting Bitcoin on their balance sheet previously, right? So very interesting stuff. But anyway, went about 18 minutes. I think I'm going to wrap it up for today. But thank you so much, ladies and gentlemen. I'd love to hear your thoughts back. And in fact, if you would, if you like the comment or of course the content, consider liking and subscribing. If you didn't like it, give me a thumbs down. Tell me why you didn't like it below. Either way, I'd love to get your feedback. But thank you so much, and stay in the know and stay crypto. Thank you.